Most business owners do not lose deductions because they spend money incorrectly. They lose them because they cannot prove the expense when it matters most. If your receipts are stuffed in a drawer, buried in your email, or missing completely, this episode will help you create a simple system that protects your deductions and reduces tax season stress. Welcome to Biz Help for You, where passionate support and practical guidance help your business thrive. Welcome to this quick tip episode of Biz Help for You. I'm Candy Messer, and in 10 minutes or less, I tackle one business question to help you make smarter decisions because I want to see you succeed and truly enjoy running your business. Today, I'm talking about something many business owners overlook until tax season arrives: receipts. Saving receipts may seem like a small task, but it plays a major role in protecting your tax deductions, keeping your records accurate, and reducing stress if questions ever come up from the IRS. The good news is this does not have to be complicated. In this episode, I'm going to walk you through a simple and practical approach to managing receipts so you can stay organized year-round and feel more confident during tax season. Let's begin with the core idea of saving receipts for deductions. A receipt is not just proof of purchase, but your primary defense if your deductions are ever questioned. Without documentation, most deductions fail under scrutiny. The IRS places the burden of proof on you, not on them. First, understand what qualifies as a deductible expense. If you're operating as a freelancer, contractor, or small business owner, a deductible expense must be both ordinary and necessary for your line of work. Ordinary means common in your industry. Necessary means helpful and appropriate for running your business. Personal expenses do not qualify even if there's a partial overlap, unless you can clearly separate the business portion. A valid receipt should show 5 things: the date, the amount, the vendor, the item or service purchased, and the payment method. If any of those are missing, you should supplement it immediately with a note or digital record while the transaction is still fresh in your mind. You have 2 options for storage. You can obtain and keep physical or digital receipts. I highly recommend saving digital copies. Paper fades, gets lost, and is harder to search. The IRS accepts digital copies as long as they are accurate and accessible. Here's how to implement a simple system that works. Every time you make a business-related purchase, capture the receipt immediately. If it's paper, take a clear photo. If it's digital, download the invoice or confirmation email. You have multiple options for saving receipts. The software you use may allow attaching receipts for the transactions. If so, the app on your phone most likely has receipt capture to upload a photo directly into your software. But note, if you stop using the software and don't have receipts also saved locally, you might need to download all the documentation in case of an audit. Most software apps don't allow you to maintain access to your data for long periods of time without an ongoing subscription. For this reason, I also recommend you maintain records outside of your accounting software. You can do this on a physical drive or online storage options. Save documents in a dedicated folder system organized by year and category. Categories should match common tax deductible types, such as office supplies, travel, meals, software, and professional services. If you buy a lot of products or services from specific vendors, you may even want to have folders for those business names to keep all documentation for those purchases together. Consistency matters more than perfection. If you delay, receipts pile up and accuracy drops. The goal is near real-time capture. Next, you need to connect each receipt to its business purpose. This is where many beginners make mistakes. A receipt alone does not explain why the expense is deductible. For example, if you buy a meal, you should note who you met with and the business purpose. Without that context, the deduction may be denied. For mileage and travel, documentation is even stricter. You need a log that includes the date, destination, purpose, and miles driven. Apps can automate this, but the key is that the record must be contemporaneous, meaning recorded at or near the time of the activity. Now let's talk about retention. You should keep tax records, including receipts, for at least 3 years from the date you file your return. However, if you underreport income by more than 25%, the IRS can look back 6 years. In practice, many professionals recommend keeping records for 7 years to be safe. For major asset purchases like equipment or vehicles, keep records for as long as you own the asset plus the retention period after disposal, because depreciation and sales details may be reviewed. One important reminder before I continue: every business situation is different. Tax rules can vary depending on your situation, your business structure, income level, state requirements, and the type of expenses you claim. While good record keeping is essential for every business owner, larger deductions, complicated transactions, or higher audit risk situations should always be reviewed with a qualified CPA or tax professional. One of the best habits you can build is creating a monthly checkpoint for your records. At least once a month, compare your receipts against your bank and credit card statements. Every transaction should have a supporting documentation. If something is missing, address it right away with the details while they're still fresh. This simple habit can prevent major stress at tax time and help reduce mistakes on your return. Another important step is keeping your business and personal finances separate. Use a dedicated bank business account and ideally a credit card. Mixing personal and business expenses creates confusion, makes bookkeeping harder, and can weaken your documentation if your records are ever reviewed. Let's address deductions further and how receipts support them. When you file taxes, you're not submitting all your receipts. You're summarizing expenses by category. However, those summaries must be backed by your records if questioned. Think of your tax return as a report and your receipts as the underlying data that validates it. If you're audited, the IRS will request documentation for specific items. If you can produce clear, organized, and complete records, the process is straightforward. If you cannot, deductions may be disallowed and penalties and interest can apply. Overall, your objective is not just saving receipts. It's building a defensible, consistent record of your business activity. If you capture receipts immediately, document their purpose, store them securely, and reconcile regularly, you will meet the standard expected by tax authorities and reduce your risk significantly. Thanks for tuning in to this quick tip episode of Biz Help for You. I hope this explanation helped you feel more confident about managing receipts and protecting your tax deductions. If keeping up with bookkeeping, receipts, payroll, or financial organization feels overwhelming, I'd love to help. You can reach out to my team at 310-534-5577 or contact at abandp.com to learn more about how we support business owners with bookkeeping, payroll, and operational organization. If you enjoyed this episode, please leave a review, share it with another business owner, and subscribe so you never miss future tips and conversations designed to help you run your business more effectively. If you have a question you'd love to hear covered, send me a message at media@abandp.com. And if you'd like to financially support the show, you can find a link in the show notes. Until next time, have a wonderful day. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact at abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.